Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. We'll have a look at the Nasdaq. Okay. And if you can't see my screen, pop it in the chat group there, but everyone should see the Nasdaq now. Right, so we're on the Nasdaq here. Now we took a couple of trades short on this as it was coming down. And I think this one, we had a short on this one. If you'd have taken it, depending on when you took it, you would have been triggered out, and then it would have went on and actually hit the take profit, the full take profit here. So depending on what type of trade you sort of took, whether you took a limit, you're probably still in it. If you took a buy stop, you probably would have been stopped out. So depending on where your stop loss was, would have been a winning trade. Now, as we can see here, we now have a double bottom. Okay, we can see that the overall trend is going down. And we have this double bottom. Trend is going down. The question is, do we expect this to break this, or do we expect this to bounce? Now, before you answer that question, I'm going to zoom out and have a quick look. Now, do we have a huge level there? Well, not really, not really. We have a little bit, you could call that a rejection there, or you could call that a break. This one was rejected, this one here. So, but it's in that sort of area. It's in that sort of zone. So we have a little bit there, okay? If we go out a little bit further, not so much. We'd potentially have one here, but look, it's broken, 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 and then we've had a couple of bounces. So would you class this as a strong level? Would you class this as a weak level? And do we now expect that to turn around? We have this little doji bar. Now remember, we cannot use this sort of bar on a daily chart. Why? Because this bar has started here. This bar hasn't finished. It's the day theoretically hasn't even started for it yet. So just be aware that there's a potential setup on that there. So we have to drop down to the smaller time frame. And if we drop down to the 4-hour, we now can see the opportunity that we were looking at. We can see that we had the floor there, it's coming down, and it's now hit the floor again. And the question is do we think it's going to hit the floor and bounce back up to, say, the trend line and then drop again, or break, or do we expect it to continue going? Now, if you were looking to take that long position, the entry will be above that green bar there, and the stop loss would be below it. Now, I have it just below this one here. Now, depending on where it goes, you'd want it to come back into, say, this area. And this is risking 3.3%, and you'd be looking for a 4.4% return. So is that something you guys would be interested in, yes or no? Yeah, because I've come back to read the chat that you guys have said. So you can see the screen now, can't you? So is that a trade, a buy there? And I'll give it a couple of seconds and I'll go back and I'll read the chart, because unfortunately I'll read the chat. So for most people, it's not a trade for them. Sam, I would agree with you. There's not enough reward for it for me. I would 100% agree with that. There's not enough reward for me on that particular trade. For some reason, I don't think there's enough reward in that. So again, I wouldn't be looking to take that trade. Even though it looks pretty valid, it's not something that would jump out of me to take. If we look at the S&P, we actually have a much better level on the S&P. Or the Dow. It's one of them has a decent level. Well, that one has a better level. We have 1, 2, 3, 4, 5 bounces. So again, this one's in the very same boat. If I get a trend line on that, we're sort of in that area, aren't we? I'm trying not to chop that off. I'm trying to touch that. So we have 1, 2, 3, 4 touches. Question is will that bounce back and touch that level, or are we expecting this now to break the floor? Same trade here. Absolutely this very, very same trade. A buy signal there. Now, would I be looking to take that? No, not at all. Not at all. And remember, if you're taking this as a buy, your stop loss has to be below that there. Has to be below that there. So we have to bring this down a fraction. To about there is where our stop loss goes. So that's 3.27. Let me see, 3.3 there. And we have a one-to-one there at that particular point. But again, is it worth that risk to reward? Is it worth jumping in on the likes of that? There's the level that we're coming off of. Yes, we have a much stronger level there, but again, do we think that that's going to break, or do we think that's going to bounce? Absolutely. Again, it's not worth the risk. With what's going on politically, anything could happen. Anything could happen. And then if we go back to the daily chart, and the same on the Dow, so the Dow is there. So the S&P was the one that had the decent level. But again, we're back here, 1 touch, 2, 3. Literally identical to what we've looked at the other ones. The only difference on this one is that the trend line doesn't work on this one, where it works on the other two. Trend line there doesn't work, unfortunately. But what we do have is we have a pretty decent horizontal level just above it. So if I get another horizontal, so even if we do take this long, just imagine we do take this long, you have to be taking profit before it hits that ceiling. Have to be taking profit before it hits that ceiling. So then on this one, for me, the risk to reward is definitely not there. So it's definitely not there on this particular one. Does that make sense? Absolutely. So the idea would be to trade stuff that we are expecting to continue going in that direction. So the European markets, I fully expect to continue going. I don't see any reason for these European markets to turn around. Absolutely not. So there, bounce, bounce, bounce. So if this market comes back up to that level, I will be looking to short this if that pops back up there. If that hits that level, I'll be looking to short that. Now, whether that happens on a smaller time frame or whether it happens on a bigger time frame, I'll be looking to short that particular one. Do I think we're going to have a big bounce back up here and then drop? No, I don't think so. To me, that's a pretty decent level. It's a level where investors and people will be looking at that as a place where it will struggle, and short sellers will be looking to short the market at that particular point. French CAC. So if we look at this, it's pop back up. So if we go back and have a look at the daily, so if I zoom out, so we found that level 1, 2, and look, we've already had that rejection on it. So see that wick there, popped back up, dropped down to the smaller time frame, and look, it's already popped up and hit that level. Now the question is that going to continue dropping? Is that going to continue dropping? Is there a short position then we can take on that? So if we're looking at that there, where then does it take profit in this? Need to pop back up to the daily and have a quick look. Well, there's a big, huge level there, isn't there? So there's where we'd expect some sort of rejection if that pops down to there. So that'll be risking 5%, 5.2 to actually make 5.7. But the question is that if that is a short there on the smaller time frame, do we expect the market to stop there? Or do we expect the market to continue dropping? Unfortunately, I can do absolutely nothing about the internet. I do apologize. So is this a trade that you guys would take? Yes or no, the French CAC? Absolutely. Initial reward doesn't look great, but remember, we have the momentum behind us. The momentum is dropping. So if that is a setup that we think is deemed a good trade, then there's loads of room for this to potentially go. Could end up hitting down here. So there's still loads of room for this to go to the downside. UK 100. So the UK 100 hit a roadblock here. Hit a nice level, 1, 2, 3, 4, 5, and then we had that rejection. Right, so we had a nice little rejection on this off that floor. Now, my question sort of to you guys is do we think that is the bottom and we have a little pop up, or do we expect this to continue dropping? Let me have a quick look at the 4-hour. Are we going to get this popping up here? And if that popped up there, would that be a good area to place a trade? And if we get a nice price action, we'd be looking for this to short, wouldn't we? We'd be looking for this to continue dropping. The break and then the retest. So we go back here to the daily chart. So if we get that, if we can get that little pop, that should be quite nice. But again, this one hasn't moved anywhere near as much as the other ones. So the other ones may be a better trade because they may move a little further than the likes of the UK. We're a little bit disconnected from Europe now, so we're not getting the same downside as them. China finally broke out of that level it had. So it finally broke out of that level. So now the question is where is this going to drop? Where is it going to drop to? Are we going to go down as far as that level? We may initially see it drop that far. It's a little bit annoying that we didn't see a little turn at that particular point to the upside. But with what's going on politically, I imagine that is also having a knock-on effect on China. So if we look at, I don't know, did anyone see the post that sort of popped up in the sort of the Discord chat group? Now, I talked about us potentially getting to $200 a barrel. Now, with the way this is running, we've gone 1, 2, 3, 4, 5, 6, 7 days. We've gone from $90 a barrel to $120. So in 7 days, we've moved $30. If this continues, there's no stopping it, is there? There's no stopping it at the minute. It's just one of these things that is going to continue running. Now, where the end of this is, no one absolutely knows. No one knows. Just, I think I have the stats here. Bear with me of what percentage oil. So to give this a sort of a breakdown, is that the United States produces a market share of 20% of oil to the world. Saudi Arabia is 12%. Russia is 11%. Canada is 6%, and China is 5%. Now, 46% of Europe's oil comes from China or from Russia. So which means then that with what is happening, Putin has declared that if NATO gets involved in this, he will cut off the supply chain, literally turn the taps off from Russia's oil going into Europe. And therefore, there's been sort of a little bit of a knock-on effect for England to actually start producing their own oil in the North Sea. But if that happens, do we think it will hit $200 a barrel? Do we think it'll hit $300 a barrel? if this actually happens, where do we think oil will? What do we think the highs that oil will hit? If this is actually something that comes through. Yeah, but Carol, Shell announced that they've stopped buying Russian oil. Shell got battered for buying the Russian oil. So Shell bought a little bit, some Russian oil, and then brought it over, and people stopped using Shell. They got huge blowback because of it. But again, where do we think this will go to? Is there more upside to this? Are we looking to trade this? And if we are, how do we get in on it? How do we jump in on this? Now, the thing about this is that we are not following the normal rules of trading. This does not meet the normal rules of trading. At the minute, we are jumping in on supply and demand. Basically, that is literally what we're jumping in on. We have a demand there, and we're hoping that we're not the ones that get caught out with the jumps and spikes. That's basically it. That is basically it. So if I drop down here to the smaller time frame, we can see that we're getting cyclicity, aren't we? We're getting cyclicity. There was a break and retest right there. Did anyone take this? Did anyone take oil there? Move the stop loss up a fraction. So that's risking 5%. Up to the high there is 5%. So you have a 1-to-1 there. So at the minute, you're probably about 0.4% up. I don't think you're quite halfway up. Do we expect this to continue going, or would we expect this to be stopped out? How many people took that? Took it on the 1-hour chart, continue going, yes. New highs coming. Well done, anyone who took it. I don't think I saw a screenshot of the people who took it in the chat group, But there was an absolute trade there, 100%. We had a support and resistance, which was there, bounce and retest. We had a trend line, 1, 2, 3, 4 touches. At the present moment in time, that's probably as good as a trade that you're going to get. The difference is now what do you do with it? Do you keep your stop loss far away so you potentially don't be stopped out? Do you have your take profit nice and tight as a 1-to-1? What do we do here? Or do we place this trade and then walk away from it and come back to it in a month's time, hopefully that it's now gone on to $600 a barrel? So one of the things that you'll have to do is look after your trades. Make sure you're trading it correctly, because this won't go on forever. And when we do get a point where the market is over flooded, we will get a pretty big drop on this. Remember, this is massively overinflated with what's going on. This will drop like a stone at some point. This is now like a meme stock. Or even to give an example, okay, to give a live example is this. To give a live example, look at this. Look at the run that we had. Look at the run that we had in gold. It just kept going and going and going and going. Okay, so it went up and hit 2074. And then what happened? It dropped from 2000 all the way down to here, 1675, which is a pretty big drop. So that was a drop of 20%. And that was an asset that wasn't overinflated because of political unrest. Okay, that was just a market movement. Why? Just literally because of supply and demand. We at the present moment have movements on the markets now of political unrest. What's going on in the market? So when we do get a point that this is now sorted out, we do get a point where the market starts to be flooded with oil. This will drop, and it will drop pretty quickly. So make sure that where you're not overexposed on one of these particular assets. Okay, make sure you're not overexposed on it. That if you are trading with a stop loss. You are trading within your means, that if you have a losing trade, that you're happy to take that losing trade on the chin. Okay. Yeah, so the ticker on eToro was just oil, yes. Also, when we're talking about the likes of stuff, there's also expiry dates. Just make sure you check the expiry dates and stuff. Any of the commodities that you're trading, make sure and have a look. Now, someone said there's also a trend line here on natural gas. Now, natural gas, is this as good a trade as the oil one on the 4 hour? Yes or no? So yes or no? So most people said it's not as good. Now, unfortunately, we don't know that yet. We don't know that yet. So if we're taking this as a trade, we cannot take this as a daily trade. We cannot take this as a daily trade. Why? Because the bar is too big. So if we look at this as a buy, a long position, our entry's there, our stop loss is just below it. So just there. And that is 8.2. Let me move this up. 8.2. So there's that 1-to-1 on that. That's a huge movement for us to get triggered in, isn't it? Now the thing is that if we are expecting this to turn around here, we then drop down to the 4-hour and wait for the 4-hour bar that finishes here. If you believe that that's the place it's going to turn around. So every time we talk about a trade hitting a horizontal level and a rejecting, that's what it looks like on the daily. See this big, huge red bar? That's what it looks like on the daily. Looks like a big, huge red bar. But what we found is we found this floor where we're expecting it to turn. Now, is this a perfect trade? Absolutely not. Absolutely not. This is a trade where we are sort of being super aggressive. Why? Because the daily is in phase 2. The higher time frame is in phase 2. This is the higher time frame. Now, anywhere than the boot camp, the higher time frame should always be in phase 1 when we're dropping to the lower time frame. But this is the opposite. This one's in phase 2. So is this the perfect trade? No, it's not. But is there a potential trade here? Absolutely, if we get price action on the smaller time frame. So if I drop down here to the 4-hour and see that bar, if that bar finishes like that, could I then take a new trade? So instead of taking this as a daily chart here, a daily trade, could I take a new long position using this bar here? Putting my stop loss underneath it there. So at the minute, that's 4%. And then we'll put it back up to the high here. About there. 4% versus 9. So for everyone who misses these trades on the smaller time frames, that's actually what it looks like live. That's what it looks like live. And you're going, oh, I missed the trade. But on the other side of it, you might look at it and go, nope, that is not a trade for me. Now, the ideal scenario here is that if we're wrong, that it continues going down. So we're using this line here as our entry. So we're wanting it to turn around to the upside and get triggered in on the way up. So the ideal scenario is if we're wrong, that it just continues dropping. And then it costs us no money because we're jumping in here at 4.706. So that's what we're looking to get in. Now, if we're correct and the market turns, that's exactly what we're looking for. Turn right there and trigger us in on the way up. So just a quick poll now, okay? So we now have seen the logic behind the trade. So do we think that one there is as good as oil or not as good as oil? I'll check the 1 hour now in a minute, Tyson. But which of the two do we think is better? Was the oil trade better? Or was this one better? Or is this one better? Which one do we think is better? Which of the two do we think would have been a higher probability trade? And just to give you an idea of what the oil trade looked like. So there was the oil trade there. Oil's had a little spike since we talked. So instead of being 0.4 up, you're now probably about 0.6, 0.7 up. And there's natural gas. Okay, so most people are looking at oil as a better trade. And the reason why oil is a better trade is because if we look at the daily chart, it's in a phase 2. Whereas if we look in a daily chart on oil, oil's in phase 1. Now, the negative about taking oil is massively late in this phase 1. It's not early, it's late in the phase 1. The positives about gas is that if it turns right now, we're getting the very beginning of that momentum upside. Now, also remember, we would want to be at least par closing our trade at that double top. Par close your trade somewhere about there. And then if it continues going, happy days. If not, then move your stop loss inside break even. So the other half doesn't lose anything. Okay, so that's the idea, is make sure you're mitigating any downside in that. Okay, on to another commodity that's doing super well is wheat. And wheat is just, skyrocketing. Just one of those ones that has gone on sort of from strength to strength. It's just doing what it should be doing. Well, what's going on? If it dropped down even to the smaller time frame, there's no real opportunity for us to get in on this, is there? It's literally just gone. There's nothing there for us to sort of jump in on this. You will have people who have bought it now. Why? Because there's a green bar there at the moment. But it's not something that we sort of should be looking at the moment. Sort of stay away from it. But it's good to keep an eye on, in the sense that if it pulls back and gives us a half decent entry, then we could take that, couldn't we? Come back over here to eToro. Look at platinum. So anyone who has been in any of these precious metals has done pretty well as of late. Why? Because what's going on in the world at the minute, a lot of these things are jumping. A lot of these are spiking, these raw materials. Okay? These raw materials are jumping, they're doing what they should be doing, is getting a little more expensive. Because when we have uncertainty, people like to have tangible assets. And that's exactly what's after happening across the market here with the commodities. So if we get a pullback on platinum into any of these here, would expect this to continue to go up, wouldn't we? Palladium. Also had a massive jump. We talked about this here being a break and retest. Literally there. You got very close to being stopped out in this. And now look where you're gone. Now I assume no one has that left open. But it's the highest it has been since what, 2019 minimum. Pop in a horizontal level there. Can we trade this at the minute? No, we need some sort of pullback. We need a pullback on these. They're definitely not at a point where we're looking to trade. So someone has asked, how do we get the expiry date on any of them? I'll show you now. Okay, so copper had a big spike, popped back out. Horizontal level there. We've now popped back inside. So if that potentially pops back to the trend line, there's a potential buy there. But copper is probably the least trending of the commodities at the moment. Okay, so it's not that important to be trading the likes of copper. But how do we work out when it expires? Well, first and foremost, you can stick it into Google. When does copper expire on eToro? Or if you press the buy button, this trade will expire at a certain date. Learn more. And it literally comes up here. Currencies, commodities. So it tells you when the market closes, when the daily breaks are, when the market opens, so on and so forth. If you continue going down, halted trading. So on copper, there was trade halted. Closed. And now we're down to expiry dates. So copper expires on the 26th of the 4th. China expires. Coca, wheat, cotton, palladium, nickel, copper, aluminium, sugar. And then there's crude oil futures. So it depends. If you're buying oil as an underlying asset, okay, there's a monthly contract. So just be aware of that. So what an expiry will do is if you're in a trade, it will close you out at that particular point. Doesn't matter whether you're winning, losing, it will stop you out at that particular point. So Rolls-Royce. So why do you want to look at Rolls-Royce? Are you looking at Rolls-Royce as it's hit this floor? I'm expecting it to bounce. Are you looking at Rolls-Royce as in it's now a good buy as an underlying asset? Are you looking at Rolls-Royce with going on what's going on in the market? It's a good place to buy Rolls-Royce because it's going to be selling engines and all that other stuff. Probably because it supplies engines to BA and fighter jet. Future good investment. Maybe the demand will be increased. And the answer to this is probably no. Probably no. The answer to that is no. The market's in a bear market at the minute. Do I expect Rolls-Royce to turn around now because it's hit that level? Absolutely not. It may have a small bounce, but I expect it to drop lower. So would I be jumping into Rolls-Royce at that particular point as an underlying asset buy? Not looking at that graph, no. Not looking at the market sentiment. And if Rolls-Royce was one of those big players in the market, it probably would have jumped by now. Probably would have jumped now. I done a webinar a couple of weeks ago on what's made jump in times of war. Lockheed Martin, Raytheon. There was a few other ones that all had potential to jump, and some of them have. But I don't think Rolls-Royce will be one of them, in my opinion. I could be wrong, but I don't think it will be. Okay, everyone. Well, thank you for bearing with me. It's been a strange old webinar, but thank you very much. Hope you have a lovely evening, and I will speak to you all on tomorrow's webinar. If you're not in any of my chat groups or anything like that, just let me know. WhatsApp me, email me, whatever, and I get you into the sort of the chat groups. Make sure you're following me on the likes of Instagram and stuff like that. They're henryward.trading. There are loads of scam accounts of mine out there, so please make sure henryward.trading. And if you need any help, just ask. Okay, I'm here. I don't bite. Thanks, everyone. Hope you have a lovely evening. Bye-bye.